What's up guys, welcome back. For today's video we're going to go more in depth on using the EMAs as well as VWAP to give us a little bit of a better understanding of how and where we can avoid chop zones, as well as how and where price can move faster. This is kind of a way that I've never really heard talked about, and it's basically just using the slope of the EMAs as well as where to look for potential entry spots intraday if we do miss, say, a trigger or something like that. So in this case, this is the first scenario, would be looking for reversals. This is from July 12th, and I've noticed once we get a little bit of a chop here in the morning or earlier session, could really be wherever in the trading day, but in this case, notice how the VWAP not moving much, pretty stagnant, right? These two EMAs here, the 9 on top, the 20 on bottom, there's no separation. In this case, this indicates to me we have some pretty choppy price action. I want to avoid choppy price action as much as possible. It's easier to say that right now looking back, but when we're looking intraday, how we can use it is the slope of the EMA. When there is a greater degree of slope, price is going to move faster. When price is going to move faster, I'm usually looking for the 9 EMA for a potential entry pullback spot if I do miss a trigger level. If we have a little bit slower movement or it starts to fade intraday, then I'm going to look more towards that 20 EMA for a potential pullback entry as well. VWAP being the last possible entry spot I'm looking for, either using it as support for calls or resistance for puts. In this case, notice how we have pretty stagnant movement we talked about here early. VWAP's not moving much, which makes sense. We're chopping all day. Once the slope starts to pick up, granted we do break a very key level here, about 383.7 it looks like. We do break that, but the slope starts to pick up on both our 9 and our 20 EMA as VWAP is still stagnant. This to me indicates a very fast potential move on a reversal. In this case, we do get that. We get a nice sell-off about $3 to $4 here late in the day within not even an hour of trading, which is crazy. But how we can tell that is slope starts to increase. We do break a key level, and both our 9 and 20 EMA are underneath VWAP. We start to get separation here between our EMAs. Very fast move. Where would be my entry spots in this case? First, close underneath this key level here that we've bounced off intraday at 383.6 it looks like. And then second, if I miss that, pullbacks to this 9 EMA. Notice that price is starting to move. We started to get some separation. The slope is gradually increasing, indicating to me I like that 9 EMA pullback. Price can move faster. So if I miss, maybe I miss this potential entry here, which is a double top, miss this shooting star, miss any of these, this would be my first potential entry. And then second, either of these candles once we break below these zones. After that, I think it's a little bit chasing, getting close here into the day, so I like that a lot. Let's look at another example. So here we go, a nice, pretty much a trend day. So as we noticed here, we get a trend flip right about here where price does start to move faster. Our EMAs have a little bit more of an increasing slope, but the key part here is we have separation between our EMAs and between VWAP. This indicates price can move faster. Get a nice pullback here to VWAP, which can act as a very key level. We start to base, while technically in a downtrend short term, but more of an uptrend here throughout the day. If we don't like that entry, perfectly cool. Reclaim both 9 and 20. 9 and 20, increasing slope on the 9, the 20 a little bit more stagnant. It's a longer time frame based EMA, so it does take a little bit longer to move. Get a nice entry here on the 9. As we can see, we are above VWAP, above this, starting to get separation. That's where I'm going to look for the 9 EMA for an entry. If we don't like that entry spot, have another one here for a nice push up. Then let's look more on the chop days. See, it's a little bit harder. Our EMAs really never get any separation, so it's a bit harder there. Let's look at DKNG. Very good example, very explosive mover here from Friday. Potential for a number of entry spots. If I'm using orb levels for an entry, I can use the high here. I also can throw down fibs if I want. I can do this. I'm gonna have to reverse this. It's flipped. It was already reversed. Okay, so if I'm using orb levels, if I see this fourth candle, the 20th minute candle with a nice, tweezer top or some sort of reversal, that's where I'm gonna look for an orb pullback to this golden zone here. In this case, I have multiple levels of confirmation. Test the 20 EMA, close above the 9. This would be a very, very good entry spot. Maybe we don't like that, not as sure. Okay, cool, we can wait on an orb close. We get an orb close, but this is why I love waiting on the orb retest. This would be our retest here. Second candle closes above, adding more confirmation. We test that 9 EMA and we push. This is where that separation piece as well as slope can really come into play and give us a better effect of how fast this can move. As we notice here, there's good separation from the start on the 9 and 20 EMAs. This indicates to me we could have a very, very fast mover. We get this nice pull back here to the 9 and the golden zone and the 20 EMA. That is 4 levels of confirmation. If we add VWAP in there too, we close above VWAP as well. That's a lot of confirmation, pretty high conviction trade there. And as we notice, never really test the 9 EMA, so where do we sell off, or where do we look to scale? Well, it depends on our entry, but we really have no reason to cut this until we close underneath the 9 EMA all the way up here. If you're playing 0 to DTEs, might want to cut a little bit sooner. But in this case, I probably would stay away from those just because it helps me better with managing my trade. And I have no reason to close until we close the trade until we close underneath the 9 EMA, which is a potential for a shift in trend. Never get it, so no real 100% reason to close the trade besides the fact of not having to hold it overnight. That's how I really like to use the EMAs a little bit more, to try and avoid the chop as much as possible. Chop, I've noticed, has killed my account, so I'm going to try and avoid it as much as possible. It's really hard to trade, really hard to get on the right side. If you do, you may get 5%, you may lose 10%, and then it goes right back up. You never really know. So trying to avoid the chop, using that EMA slope, as well as separation between the EMAs, has really helped me just avoid the chop. And avoiding the chop in turn has helped me grow my P&L a little bit better, as well as catch these more explosive moves.